I want to welcome you today as we talk about some economic and stock market risks that are out there right now, as well as some advanced planning that you can be doing to make sure that you can navigate the year ahead. So we have a lot to dive into, and I want to get started with our very first element. Number one, economic and stock market risks. Last week was pretty significant, especially when it comes to small companies. You see, we've had some selling in the markets, and the small companies were not immune. But specifically, I've been saying for the last couple of weeks that the small companies hold the key to our future. You see, they're starting to pick up in price, which was actually a really good thing. But as of last week, we really started to head back down. And this downturn could be very significant, especially as we approach some critical levels. So yes, volatility picked up last week. Yes, we had a sell-off in the stock market. And this was mostly driven for the fact that we had a higher than what we expected inflation. And I'm saying we as in the overall economists that are out there. But also the largest contributor to last week was the options expiration that happened on Friday. You see, this is one of the largest in history. And what happens is that when we have all of these different types of dealers that are out there with what we call options, they need to either buy or sell appropriately. And last week, there's a significant amount of selling. Now, this does not actually show the overall trend of the stock market, rather it's a very short-term action. So what we need to look at is the volatility, and we need to look at what are the other drivers out there. And right now, we're still starting to see value companies over growth, and we're also continuing to watch the fact that we could be coming into a significantly good time for our economy as well as the stock market. And if that's the case, then what we saw last week was just that, temporary. Number two, portfolio changes. While it is true that we are starting to see value companies outperform growth companies, that takes the liking of, say, energy over technology. While both could be going up, but one may go up a little bit faster than another. You see, when we take a look at what's happening right now with all the different dynamics around the world, it's no wonder that we are starting to see and adding into the portfolio certain types of energy companies, while also adding in material companies, industrials. And these are all ones that would work well when we have the US, Western Europe, and Asia, including China, really starting to pick back up in the manufacturing. So all of those, yes, could be inflationary. But when we add in the correct stocks and the correct ways, that is what could really help to diversify the overall portfolio. So yes, we're keeping an eye on things here, and emerging markets are one of those that we think are going to work really well this year. But we are also looking at the fact that diversification means more than just stocks and bonds, especially when bonds are not working very well. So that's the element that we want to keep in mind. We're adding in some of those value type stocks, and that can really balance a portfolio in the long term. Number three, wealth management and advanced planning. We have been talking a lot about taxes recently, and today is no different. But I want to talk about an element with capital gains. You see, we have talked about a lot of different ways to be working with capital gains. There's one that you may significantly want to increase in your overall wealth plan. And that could actually mean, well, the savings of a lot of money when you don't have to have highly appreciated assets paying capital gains in order to sell them. Now, yes, there are ways that you can be using money to provide income, to provide just some stability. But what if we may not need all of that money? What if we want to provide for charity as well? And that's where a charitable remainder trust could be a very good play. You see, what happens here is that we can be using your money to help benefit a charity. But in the meantime, we can actually be using that money to provide some income for you as well. Now, the nice thing here is that we can transfer those highly appreciated assets into a charitable remainder trust, provide the income for you without the tax burden. So this is a way, basically, to have your cake and eat it too. Now, yes, there are things that you need to be just understanding here. The fact is that we can be having the money set aside for charity, and we have to have a certain portion of it go to charity. So we won't have access to all of your assets that go into this trust. But when we structure it correctly, it could actually be providing a number of years worth of income. And that could be very helpful. So when we talk about charitable remainder trusts, charitable lead trusts, those are all different ways that we can provide some income and get the charitable offset. But there are also some other ways to navigate your overall capital gains. You can do what we call direct indexing, where we can actually be selling a gain and a loss at the same time. So there's many different ways we can be working with this. And that is part of the tax harvesting features, and that's part of our tax management that we go to overall with your wealth planning. Number 4, our second opinion service. You and those that you care about have the opportunity to go through our second opinion service. Now this takes a look at where you're at today, where you want to go in the future, and then we'll take a look at if there's any gaps that exist. Now, what we will help you do is to close those gaps and strategically take a look at any areas that we need to really dive into to make sure that you have a wealth plan that is tailored and suited to you. So take us up on our second opinion service. This is a complimentary for watching this video. Please click on the link below and you can sign up as a way just to be having a 15-minute introductory call, and then we'll dive into what we call the discovery meeting. And all of that could help you to close those gaps and help to improve your overall wealth plan for the future. I want to thank you for watching today. You know, we have a lot that we covered, and if you have any questions, please reach out. We'd be happy to answer them. Take care.